Okay, so we're going to do a midweek recap on all the trades that may be able to be entered towards the second half of this week. Some of them have moved pretty well, but to be fair, in all fairness, the market's still sort of resetting. We've had that push phase, now we're coming back into a pull phase, and now it's just being patient. So if we want to start on Euro US dollar, you can see what we're looking at here. We're looking at a buy position, and if we break this back down, you'll be able to see exactly why, because we are firmly bullish. And now we had that bullish confirmation as soon as we broke this trend line, but once you actually go back down into the smaller time frames like the 4 hour and the 1 hour, you start to get a better understanding of why taking a buy might be a good position right now. Because obviously we've broken this trend line, we've respected it. As you can see, we've had many candles outside, we've not come back down to immediately retest, and this is really the first time after we've had a proper breakout that's been respected. I wouldn't really class this one as a proper one that's been respected because it's very, very close. This one's came all the way up, created a double top, come back down now, and we can see that this area of support is actually matched up really nice with the edge of this trend line. Now, normally when a trend line is broken, it will come back down to be retested just to make sure that the market's accepting this breakout, and then we are looking to push up higher. So on the 4 hour, you can see that this is one big massive momentum candle, but if we go down into the 1 hour, you can start to see price slowing down just a little bit. So now what we'd be looking for, now that you've seen, we've had that rejection pushed up, now you notice the bodies of the candles are getting a lot smaller and we're sort of rounding it off. So now what we'd be looking for is in about 43 minutes, a candle like this where we just engulf this one, or if we push down but close up higher, so a hammer candle, then of course we will be looking to take a buy position. We'll be looking to take a buy position up to around 1.21700. So let me just change that. And that is obviously lining up with the overall trend, because we are firmly bullish. We've had that push phase. Now we're getting the pullback, retracing back down. It's just, where are we going to retrace to? That's where you have to try and work out and then capitalize on that. So obviously for us, this pullback phase is lining up nicely with this area of support that's been respected recently multiple times. You could see here, you could see a nice push off here, respected well in here, here, and then the story continues the further left that you go. So we know that it's relevant back then, we know that it's relevant now, and we are seeing that, and it matches up perfectly with the outside of the broken trend line. So if we manage to get an engulfing candle, or even one that is relatively strong, and what I mean by that, there's not too much wicks to the upside and we've been pushed back down, because that doesn't really give us much confidence that the buyers are about to step in and take control. So a candle like this, if it pushes up just a little bit higher and closes in 41 minutes time, then absolutely we're looking to take a buy position back up to 1.21700. Now obviously we're making that a round number because the banks and institutions like to push price action to those round numbers, and we're cutting it just short of this triple top that you could see, just under 1.21800. So that's what we're looking at Euro US dollar. The dollar's been a little bit all over the place. At one point we were thinking it could be going bullish, and then we started to see a little bit of a sell-off. This massive erratic wick here, it's not type of markets that you want to be getting into straight away on big massive candles like that, because it is typically just news. And as you can see, what happens is price has opened here, pushed back down, pushed all the way back up, and now it came back all the way back down. So typically what happens when news spikes occur, they'll always come back down roughly to where the price originally was. So to get back in on the market whilst the candle hasn't actually been closed yet is a really fast way to lose a lot of money. So you'd always wait until it settles. And of course we did actually have a buy position round about this year, but we actually got stopped out, I think it was by this candle, because we didn't think it was going to go any lower than this double bottom here, but we got stopped out. As you can see here, we've hit the very bottom of this large daily support zone. So now we're looking at the even smaller picture to try and see right, what's going to happen inside the support zone that's going to give us a buy position. That's what we're looking at. But vice versa, we are still aware that it could go to the downside. Because if we are looking for, I mean, typically this doesn't matter all the time, but typically if we're looking for a buy in Euro US dollar, we are thinking that the Euro is going to be strong and the US dollar is going to be weak. But in this scenario, of course, you can see the trend is the US dollar versus CAD has been weak, but very, very overextended market. We've come back in, sort of rested on this level and pushed down further. And now this level here is a huge, huge weekly level that many times in the past has shown a lot of respect and in quite a big way. So if you can see to the left here, the last time we did come and touch this, and it goes further back to the left as well. By the time we got here on the 11th of September 2017, we really just sort of took off to hit a peak around the 3rd of January 2019. And if we look at just how much that actually moved up, so it's like 1,608 pips, so a lot. I'm not saying that that's going to happen on this move, of course, but it is a very, very large area that's had a channel attached to it that's been in a bearish fashion for a long time. This bearish channel started really on the 30th of March 2020, so we've been just over a year now, and then we're finally coming down into this massive weekly support zone. So then obviously, as you can see on the daily, we've had quite a slowing in momentum, and then of course this candle close is going to be really interesting because the sellers have tried to push the market down. We've got to the bottom of this zone here, and then we've been rejected, and it looks like we're going to close bullish. So that's a great telltale sign to be taking price action on a counter trend for the now anyway, as a buy. But with that being said, we are still in a downtrend, so we need to be able to not get too attached to any bias and make sure that if we do have an opportunity to get back in a sell position and all the signs are there, then we take it. But if I was to make a prediction, I would say that this could be, if any, the best turning point for this to break out of this channel just by going off previous data. But we're just going to wait and see what the market gives us. If the market gives us an entry, then we're going to take an entry in the buy. We might even half our position, take some profits as we start approaching this level. We could even get in another position if we close that on maybe a retest of this zone here. But again, if that's not there, we're not going to take it. But this one, as it stands, that could be a nice 6 to 1 if you're risking 2% and you're getting 12% back in your account. That could be a nice risk to reward regardless. Again, now that we've sort of retraced this candle, I'll wait and see if we do sort of form like a higher high, higher low here, and then push up. Then we can maybe get an entry signal down here. But until that happens, we're just going to sit back and watch, and we'll quickly skim through all the other pairs. We did expect to sell on USD Jpy, but we didn't take that. We would only really take it on the first breaking retest because that looked quite promising. We had a good entry signal here. Ended up closing that down about here, but as you can see, we've got a double top that we actually missed. That would have been another really good entry because it's still below that level, and the double top's prominent for going to the downside. Now here would have been a brilliant entry as well had we anticipated that this level was going to break, but we want to see the level break first. So now that we've had this push, we want to see it come back down into this level. But let's just have a quick look and see if we take this as the move here, where would it come back down and retrace to? So 0.618 fib, that's the golden ratio. So we know that that area on these double tops, that is definitely an area that we want to be buying if the market comes back down into and then slows down. And then obviously we need to wait on an entry signal, because our entry signal, if we're getting right, is going to provide us with all the profit. It's the difference between making a little bit of money and a lot of money. So when it comes down into key areas like this and you understand the market structure and what it's actually telling you, how to read the price action without all the indicators, then that's when you can typically make the best decisions, not in terms of just getting in, but also in terms of getting out, because you understand when the market's actually turning on you. And if you manage to control your emotions and not get addicted to being right or any one particular bias because you've spent a lot of time and effort on analysis, then you can make a lot of money both ways, with the trend and counter trend. Of course, counter trend is a lot more risky, but once you start getting a little bit better, then you will be able to take those counter trend trades without having to wait on the market all the time to be in line with the trend, because you can sometimes be waiting for a while. So 𝗙𝗍𝗃, let's see what we've got here. Again, not really want to touch that. When I see stuff like that, I just want to leave it until at least comes back down to this level, just under 1.09500. So right now, I mean, there's plenty of moves to the upside, but again, I'm not a buyer until I'm coming back down at least into this level here. So if I throw this up, so yeah, just under the 0.618. So you can see here we've had 3 really good touches, so definitely keeping that in there. And if the market wants to give us a buy in there, then of course we'll take it. Aussie Jpy didn't get in this one, but you can see the analysis there. So again, it's started moving pretty well down here, and then it just started getting a bit choppy. It does look like we would have hit target, but of course now we've obviously missed the entry, so we may as well just delete that and move on. GBP USD. In fact, actually, could we maybe let's see, maybe we could have something. Let's see. So that seems like a pretty accurate level, but you could maybe even get a buy position at this if you have a look, because you can see that this has been the big move up. This has been all the way up here. Now we're sort of coming back down, and it normally comes back down. This is what the Fibonacci levels are. It's either like typically the main ones for me, the ones I see most often are the 30%, 50%, and the 61% range of the Fibonacci retracement. And then if we do actually see some slowing down in momentum, we might actually, as we get closer and closer into the week, be able to get a setup to take this long. We might even be able to get one today, who knows. But again, this is something, I'll just move that down here, because that's something that we could be looking at potentially in a buy. But again, it's not really the cleanest of setups, because you can see a lot of wicks to the upside, a lot of wicks to the downside. There's no real conviction. The market's still moving though. It is still moving. It's just not showing great signs of volume, but nonetheless, it's still a valid setup. So NZD Gpy. Missed that one. Didn't even. But you can see what we're looking at here. There was just a rising pennant in amongst an even bigger, sort of almost broadening channel. And we were looking to take this back down to at least the bottom of these lows, but again, that's already played out. So we will keep that there, of course, because when price action does come back down to this region, we will be looking to take it probably all the way back up to this double top here, around about 79,400 handle. So, but again, until that happens, we'll just keep it on the watch list. Aussie US dollar. Didn't take this one either because of just how erratic the spikes up and spikes down were. It just looked real messy, real choppy. But then, lo and behold, what happens? It tanked. It respected that level very well. That was our target, so we'd have hit target and a little bit more, and it had a nice retracement, and we've tanked again, and it looks like we were going to tank again all the way down to 0.7, I would say about 0.77140, round about that region, 0.77150, and that will be the very bottom of where the actual channel has started. Normally when the bottom of the channel, or the bottom of the trend line, or the bottom of the pattern, if you have a breakout, typically speaking, price can be traded all the way down to where it originated. So that's something to keep in mind. We've had that first push, we've had that second push, and then it looks like we'll have a third push before the market will actually start slowing down. And then I think everybody will be looking at that point and saying, right, let's reassess here, what's the next move for this pair, and then whatever the market decides to do, we'll act on. So Aussie CHF, nothing to look at right now. It's a little bit messy. I mean, we could potentially, if it respects this level again really well, we could get a buy up out of here, but it just doesn't seem to want to leave this descending pattern, this descending wedge pattern. It's almost like a channel, but it just does not seem to want to leave. So right now I wouldn't really be comfortable taking a buy position. I'd rather just wait until we had a nice little push up, and then maybe a really small pullback to signal, okay, the buyers are definitely in control, and then maybe getting somewhere around here, and then look to hopefully break out and get it all the way back to the top, around about 0.72300. So moving on to Euro JPY. Again, we're looking for shorts on this, but the overall pattern, the bigger pattern that plays, quite a little bit away in terms of development. But as you can see here, we are showing some good signs of momentum. We had that nice shooting star candle, another shooting star candle, well, more like a shooting star candle and maybe like a graveyard doji. And then what we're going to look for is price action to start squeezing to the right a little bit, and then we'll look for those sell positions just back down to just before this area of support at 127.500. So again, we're going to need a little bit more development, but once the development comes in, you know what you're looking for. We'll be able to see if this level is actually going to be respected, and then we'll take price action back down, and then we can maybe even get multiple trades. So you would get push, the pullback, and then you could even enter a second position if you got in early here and it started moving in your direction, and then maybe came back and retested an area that the market's respected recently. So what that would look like would be the bottom of these candle bodies here, so round about the top of this range. That's typically what you would be looking at in terms of a pullback region. And then if it sort of respects around this zone, there's no reason why you couldn't get in a second position, and maybe even a third position if the opportunity presents itself and you have your first position, of course, at risk free, or have mitigated at least some of the risk and then made your third position a little bit smaller. So Euro CAD, quite a lot of bit. Yep, definitely a lot of development needed, so I wouldn't really pay too much attention to that. There's a big overall picture of where this market could go, but again, this is on the weekly, so right now we're firmly bearish, but over the next few weeks we could start to see a change in hands between the bears and the bulls. But again, right now, nothing to really be looking at. CAD JPY, still not broken back down in this channel, but what we are looking at is obviously a pullback, but we need to wait and see if this channel's actually been respected, because if it's not and it breaks back down below, then we will look to maybe even trade the edge of this pattern back down to a region like this. This is also another pattern inside the pattern, so you can see this trend line is squeezed right through, and this would be a good area if we did come back below this top trend line to, if we got the entry, trade back down to round about the 𝗙់_000 handle. So it's really just about being prepared for trading the market in both ways. If the market's predominantly bullish recently, or it has been for weeks or months, and that is the overall trend, there is no reason why you cannot get in sell trades if you establish key levels where the market is most likely to go, and have a good understanding of structure and what the candles are actually telling you on all time frames, and really just having the system and a process, almost like a checklist in your own head, without actually going through a checklist to say, right, I need just this one more thing, and then I could enter based off this, this, and this, and they all have to be relevant. They all have to be relevant to the price action that's happening right now. Levels that have happened years ago are great telltale signs, but they have to make sense in today's price action. If they're not making sense in today's price action, then you need to start looking for more recent levels. Silver, not really too interested in that. And 𝗙ʰ_𝗋𝗔𝗋, again, sort of just like 𝗙់_𝗋𝗔𝗋, the exact same thing. We're just going to wait and see what happens. Are we going to stay out in respect, or are we going to come back in and then look for further shorts and even break out on the other side? So that's pretty much been the midweek recap. This is just for going over the trades that we're looking to take. Speaking of that, we do have EUR/USD. So we might actually have had an entry soon. 23 minutes. Yep, so in 23 minutes time, we'll definitely be looking to take this trade if things stay the way they are. Because we've had that slowing down the momentum, we've had that engulfing, and then if we could just close above and have as short a wick on this as possible, if not any, then that would be a great telltale sign to get in, and you'll get a nice risk to reward. Just don't have your stop loss like ultra tight, because you leave yourself open for those little spikes, those little liquidity probes. So that's been the midweek recap. It's just to go over all the trades that we're still looking to take, the ones that we have taken, and what we plan to do in the second half of the week. So with that being said, if you have any questions, just give me a message on any of these pairs. If you're struggling to understand anything that we're going over again, just shoot me a message and we'll break it down. And the next time we'll see you is in the weekly watch list.